22,000 plus on the Nifty. That's good. 22,008 or so is where the Nifty is starting at. The Sensex is starting at 72,660 or so. So these are decent starting levels. I mean, in line with what the GIFT Nifty, etc., were indicating earlier in the day. Bank Nifty is starting about 0.8 higher. That's a 400-point pop. 46,710 is where the Nifty Bank is at. Mid-cap index starts at about 46,500. And which is about 1% higher, and I think a similar kind of start on the small cap index as well, with a 1.5% pop. But stocks now and more rates. Sonia is standing by. Sonia.
Well, thanks a lot for that. So, straight to individual stocks now. You have TVS Motor, where the company has approved that issue of bonus preference shares. So TVS Motor is up almost about 1.5%. The street is taking it very well. Apart from that, you have Wockhardt, which will be launching a QIP to raise funds. So Wockhardt has been in the news. 3.5% higher on that stock. Volumes are also picking up on Wockhardt. RVNL, as I mentioned a while back, has emerged as the lowest bidder for an electric traction system project. RVNL now up almost about 3.5%. A lot of interesting brokerage reports this morning. I want to take it to Avenue Supermarts, 2% higher. CLSA has initiated a buy with a target price of 5,107. Big upside to the current market price. They talk about a huge potential, and the market is, still quite unorganized. Let's go to Motilal Oswal Financial, where MK has initiated a buy with a target price of 2,000 rupees on the stock. 2.5% higher on Motilal Oswal. BSE Investec has upgraded BSE to a buy from a hold. They have a target price of 2,800 rupees on the stock. So that stock is up 4%, charging ahead this morning. Then you have Prince Pipe. The company will be acquiring a bathware brand called Aquil and they'll acquire the plant as well, which is located in Gujarat for 55 crores. So Prince Pipes is up almost about 1.5%. All in all, you'd have to say a great start to trade. 166 points higher, hanging on to 22,000. Here you have the big leadership for the market this morning, coming in from banks, up 400 points. But the most important part is whether this is something that is sustainable, right? Because this is a market that has been a sell-on rally for a while. Let's see if this level holds. Back to you.
All right. Well, the banking stocks, they're doing well. And the Nifty Bank has opened up and it's crossed the 50 DMA. So one hurdle's out of the way, the 46,450 odd mark. Now, all eyes on the 20 DMA, which comes in at around 46,933 odd. And when, the Fed sounds more dovish than hawkish, then you have two sectors that do well. One is the Nifty IT index, so that's opened up well in the green. And the second one is the metal index as well. That one as well has bounced back in today's trading session. In NMDC, we had Citi that was sounding fairly cautious out there. There were some reports that indicated overnight that NMDC could have trimmed down on their prices, and that was more or less anticipated because we had global iron ore prices that corrected from around $130 per ton to around $105 per ton. We'll try to get you the exact quantum, but for the time being, that stock as well has opened up well in the green. In terms of stocks that are moving around today, well, top volume movers, you have Ujjivan that's up close to 4.5%. You have SAIL as well that's popped up close to around 4%, and PFC. Keep in mind, some of these stocks have seen a fair bit of correction from the top. Zomato is bucking the trend. In fact, yesterday it ended at the high point of the day. Today as well, that's opened up with a gain of around 2.5%. And BHEL, well, that's another stock that's done quite well. So it's a good start. The Nifty has opened above the 22,000 odd mark. The Nifty Bank has taken out the 50 DMA. Can both these two key indices get to the 20 DMA? That's going to be the key trigger from the bullish perspective. Prashant?
So good start, right? 170 points on the Nifty, 22,000 plus is where we are at. Just a few other names. Bharat Dynamics is up, starting about 2.6% in the green. Stock that's BDL, that's about 1665 or so. PFC, RVNL, I mean, actually, there's a lot of PSUs, right? SAIL, BHEL, RVNL, PFC, NALCO, BDL, Bank of India, HUDCO. These are all, I mean, actually, the top 7-8 volume-led gainers are all public sector stocks. A variety of different sectors, but they're all PSU names here. JSW Infra is another one which is starting about 3.5% higher. Rico Auto has done phenomenally well in the recent past, last 6 months. 6% on Rico Auto is coming up with volumes. So we are highlighting that. Motilal Oswal, Sud was talking about that, but volumes are decent. Price is nothing. I mean, it's starting about 0.5% higher. Rate gain had a order win, I think, in the morning. We put that out, 2.5% higher on rate gain. But that's about it. So I think we'll give it, a minute, 2 minutes more, and then we'll come back to it. Market breadth is very, very strong. 10:1. 10:1 in favor of advances. But these are just starting kind of values. Praj is down 1%, is the largest volume-led pullback but just 1% after yesterday's 10% rally that we had. Britannia and Nestle are down 0.5% and 0.6%. Again, on the downside, nothing in terms of volumes. Rainbow Hospitals, that saw a big 7-8% move yesterday. That's down about 1%. So, GPT Health was another big mover yesterday. That's down about 1.25% or so. So, a little bit here and there, but volumes are yet to pick up, especially on stocks which are on the downside. Sonia.
I just want to mention, Motilal Oswal put out a report on Reliance where they have reiterated their buy rating on the stock with a target price of 3,200. They speak about how the Ministry of New and Renewable Energy recently announces its plans to set up 2 hydrogen hubs in India by FY26. They are providing incentives to set up those hydrogen hubs as well. And both these announcements are key milestones towards the government's vision to develop a strong green hydrogen ecosystem. So they believe that this could sort of aid Reliance further. So Reliance is one stock. The other stock that they like is Gland Pharma, where they have a 32% upside on Gland Pharma. Motilal Oswal, they have a buy, and they say that valuations are very attractive at the moment.
All right, interesting names there, Sonia. We'll track them. Markets, of course, still holding with a 160-odd point higher start. Amit Sachdeva is with us. He's head of India Equity Strategy at HSBC. Amit, good to have you back in the program. It's been a while. Thanks very much for your time. Prashant this side. Amit, your view seems to be that maybe a little bit of consolidation, but nothing large in terms of a pullback. This is not 2018, I think, as you put it. Just explain that view, and but you're still kind of leaning more towards large caps. So just kind of put that in context for us.
Yeah, thanks, Prashant. Good morning, everyone. Thank you for having me here. See, I think the main point is that we have to go back and analyze India's own cycles. There's a lot of wisdom buried there. So let me bring out very crisp one on mid cap and small caps. First of all, mid caps and small caps are symptoms of India's bull runs. A momentum once set doesn't go away that easily. And what happens is that typically that run over market run is about 1.4x. We have been flagging for a while that that run was already around 2x, which means that there was a lot of froth in mid and small caps. And if you look at last 4 years, there have been a consistent outperformance. And if you go back into the history, you realize when that happens, you are going towards a year where there will be negative or muted returns, right? Now, when the last month's sell-off has happened in small and mid caps, it triggers an alarm. And what that alarm is, are we looking for much deeper cuts? Because small caps corrected 8% and mid caps corrected 4%, and the momentum seems precarious when you ignore a day such as today, for example, right? And if you look at that momentum, it triggers and a question as well whether we are looking at 2008 cycle where mid caps and small caps corrected 30%. So question is, are we in that cycle? My short answer to that is no. We are not looking at 20 to 30% aggregate correction because the context is very, very favorable and very different from 2018. But does that mean mid caps and small cap will do well from here? My answer is also we need to be very cautious. The returns could be an aggregate level, would be at the best lackluster or muted. But having said that, market would be intermittent risk on and risk off. Corrections will also present buying opportunities and mid caps. So we must exploit that as well. But on aggregate basis, my tilt would be towards larger caps have lagged last year. Earning growth looks good. Indian market context seems very good overall. So we see an overall positive context, but tilting towards the larger cap, but mid caps and small caps would have its own share of volatility. Let's to summarize that bit here.
Okay, so mid caps and small caps will continue to have its own share of volatility. Got it. Amit, thanks a lot for joining in. So, how do you approach the markets now? You've told us about the backdrop, but from here on, what's the best way to approach the markets? Do you raise your cash levels? Do you churn out of mid and small caps and into large caps? Do you move to other asset classes? Over the next 12 months, what's the advice?
Okay, now that's a great question, Sonia. Let me just break it down into 2 parts. Okay. First of all, we need to have a view how risk tolerant the market will be. Right? And second, how the earnings and things will shape up, etc. So my sense is that if the US bond yields are seen to be correcting, because the key factor for India also would be external, not just internal, right? So if US bond yields, which are expected to be corrected and expected to be coming down, if it is going in the right trajectory, I see a return of a big risk on in India. If risk on happens, you could expect major bounces in corrected names as well, which includes mid and small caps as well. But even with the moderate expectations there, my sense is that earning outlook for India is good. So there'll be at least a decent year, if not a big risk on. That's one. Now, within that context, we divide sectors into three larger, buckets, right? One bucket is where things have already looking very precarious from investor sentiment point of view, and business dynamics also negative. We call it a risk-on bucket, right? So that bucket outperforms a lot when market is willing to take risk with a two-year view. That could happen predominantly. So one must choose some ideas from there. And in our last report, we highlighted that banks have slipped into that basket a little bit. So there are some interesting sectors are parking there, right? But at the same time, we also must look at momentum. Some earning outlooks are very good, and also the stock returns are very good. But momentum can carry on this market as well. So we need to blend momentum as well. And then there are some sectors which are very well positioned from a long and short term point of view as well. So we need to take a barbell kind of approach and blend all these three things together to navigate this year. I don't know whether that answered precisely the question, because I can't talk specific here, but I can sort of give more guidance on sector as such. But our view is that we should expect bouts of consolidations and bouts of strong rebounds in this year as the earnings shape up, whether any downgrade risk are building up, etc. But on an average, I expect a decent 2024. It is not going to be a negative year.
All right. Hi, Amit. Good morning. And, good to hear your thoughts. For one, our retail audience will be breathing a sigh of relief that you're saying 2024 is very different from 2018, because that was a very, very painful period for the broader markets. And this time around, you believe things are different. Since you want to talk a lot about sectors, let's talk about the paints industry. You have a new player that's come in there, and there's a probability of some disruption. As to its pricing, they have positioned it lower, and they're giving more volumes as well out to the dealers. But one of the top ideas that you'll have is Asian Paints. As a consumer, maybe I still tilt towards the Asian Paints, just maybe. But from a stock perspective, given that there is going to be some enhanced competition, how do you approach the space?
For right or wrong purposes, we can't discuss individual stocks here, so you have to excuse me there. But I can broadly say that what our view has been, that price wars, sustainable price wars are unlikely. There's a little less space there in the space, but I think it's more around how the conduct shapers. Our view is that it's likely to be rational. The reason for putting that is market is obviously bearish. Stocks have corrected on these concerns, but largely we believe that rationality will prevail sooner, and then market will discount that. That's the reason for taking contrarian view in that space there. But I'll leave it at that. We can't discuss very specific context here.
Then.
But let me just give you some perspective on 2018, right? Because what should give you confidence that we are not 2018, right? Number one, 2018 saw a broader market sell-off of 7%. That was a very bad. And then we have IL&FS crisis unfolding that year. We had GDP growth, which was 3.9. We had a US tightening cycle happening. And we had also earning downgrade. Earning expectation that year was 22. Fell down to, as the year ended, was like single digits. So whatever could go wrong in that year was going wrong. And then mid cap and small cap, which had a massive run of 4 years, corrected 20 to 30%, 27% mid caps and 30% small cap. But contrast to 2018, we are in a much stronger year. Macro is strong, earning outlook is very good, not unrealistically high. We are looking at a US softening cycle, not tightening cycle. We don't have any major, crisis in the making as such, which we saw that year perhaps. And valuations have corrected a little bit. So I would say some breather from there. So we are not looking at that precarious a year, but given the valuation, given the incessant run that has happened last year, we also must build in some caution. We cannot sort of just take a view that, okay, we have to build caution. We have to not pay for excessiveness. We have to avoid paying for excessive valuation, or where there's a lot of hope trade is happening. So one must balance that view. I would leave that. I would not worry about 2018 situation prevailing, but also caution that buying rationality is key this year, because we should not forget China has a lot, right? We are looking at years of performance. We need to balance
Got
those
it.
risks
I mean,
as well. Yeah.
take that point. No, absolutely. Take that point. By the way, I just want to highlight these names, right? Look at CG Power. CG Power was also our momentumizer name this morning. 7% on CG Power. And this after CG Power went up about 5% yesterday, right? So that's the CG Power now is the largest volume-led gainer across the board. I mean, if you flip that and look at the volumes compared to the average, you'll see what I'm talking about. And the other number two, number three big volume-led gainers are PFC and REC, each of which is up 4.5%. So this is, I mean, these names, PFC, REC, are kind of reminiscent of, just strong momentum, if not many other things as well. So just one aspect of it. Triveni Turbines moved up sharply yesterday. That's following up with a sharp gain, about 6.5% there. And something like a Sterling Wilson Solar, 5%. So that's also corrected quite a bit. 491 on that name coming through. Action Construction Equipment, Gensol. These are all kind of coming up. Inox Wind, names which were not there in the open. And of course, something like a Graphite India and HEG are two other names which are up 5% each this morning. So, broader market doing sort of very well and kind of broadening out really in that sense. Amit, just your view on, these new business opportunities, right? So, for example, I know you can't talk about specific stocks, but CG Power making a foray and investing into this conductor chip packaging segment. One of the sort of big players who've announced investments, and I guess many others will follow. Just your thoughts, and which are the areas, these new segments that you're bullish on, where you think there is an opportunity to make money as minority shareholders?
So look, what happens is that, there are two views. Prashant is the right question, and one can obviously can't tell specific into anything. So what I can simply say is that, what does it tell you? When you look at these names, it tells you that market is willing to look at decadal opportunities. Market is willing to take risk on something which is longer term themes, which is still emerging, may not have anything in the next 2 years, but market is willing to bet on what players could benefit from a larger trend. So that tells you that when we're looking at India is being looked at as not a tactical, but a large structural decadal run as well. That signals that market is willing to tolerate some risk in the short run and be willing to place bets on longer term themes as well. So that gives you some amount of at least confidence that the structural duration of India is seen as a very long one. And that's the reason some themes that come and go and will play out like that. It's very difficult to take, some sort of, thematic view every day on that. But what I would say is that, anything that looks long term, where the business models are formidable, market would place intermittently, long cycle view on those. I will leave it at that, to be honest.
Okay. I also wanted to talk about the consumption space, right? So I noticed in your buy ideas, you have Avenue Supermarts as one of the stocks. And this morning, in fact, Avenue Supermarts is at a fresh high. CLSA has spoken about how there is a $500 billion addressable market, out of which only 5% of the market is organized. So do you see the scope here, despite the kind of, steep valuations that some of these companies are sitting on?
Sonia, I'll just talk in general because there's stock I cover as well. As I said, that we can't talk about stocks. What I would say is that why we have chosen such names is one, we believe there's a long-term opportunity. But stock is also corrected for one of the two reasons, and there could be many such stocks, right? And risk-reward tends to become favorable. And one has to look at such ideas in this market where things have bottomed out and market is willing to take risk for 1 year. So our view was that wherever earning outlook seems to be bottoming out and turning around, those ideas can work as well. I'm not specifically naming Avenue, but all I'm trying to say in general, that's a larger theme we have played there. A structurally winning business model, bottomed out, and could look at uptick in, for example, growth or margins or whatever, based on certain theme that we have.
Okay, all right. We will let you go on that note. Thank you for joining in and taking the time out for us on the channel today. Well, that is the word coming in on the market, which, by the way, is looking very good. The Nifty is holding at 22,000. It hasn't been able to build on to its gains substantially. But be that as it may, the gains are good for now. 160 points higher on the Nifty. The Sensex is up 500 points. The first corporate on our radar is SJVN. The stock has surged more than 286% in the last 1 year. What's going on here? We'll find out the power demand trends, the opportunities in the renewable energy space. Geeta Kapoor, the Chairman and Managing Director at SJVN, joins us now to talk about that. Ms. Kapoor, thank you so much for joining us. I want to first start by asking you about the tariff trends, especially in the renewable energy space. Can you tell us what are for hydro projects particularly, if we start with that, right? What are the key upcoming projects that are eligible for higher returns? What do you make of the tariffs that have been proposed so far?
Right. If we talk of hydro, see, comparatively, because of the initial cost that is involved in hydro projects, the tariff is a little higher. Per unit, as on date, we can say it's approximately around 8 rupees, whereas as compared to solar, which ranges from 2.50 to 3 rupees. But this is the initial. With the passage of time, the tariff in hydro undergoes a big change. See, the initial investment cost in hydro is more, but as per CERC norms, in a period of about 12 years, the original, once the repayment of loan is over, the tariff gets reduced. Because see, tariff is determined in terms of 5 things. It's return on equity, it's interest on loan capital. So once the loan is repaid, interest reduces, we have depreciation, we have interest on working capital and the operation and maintenance expenses. For example, I would like to tell you that when NGHPS, our 1500 megawatt Nathpa Jhakri hydro power station started commercial operation, the tariff was more than 4 rupees per unit. As on date, the tariff has reduced to 2 rupees 40 paisa. And it happens with all the hydro projects. As of today, our hydropower station, that is Rampur, the tariff is around 4 rupees, a little more than 4 rupees 16 paisa. But after 12 years, this will reduce to 3 rupees. So what happens in hydro is, starting tariff is higher because of the initial investment cost, but with the passage of time, it reduces.
Okay, that's very helpful actually. So you said right now, it's 8 rupees per unit on an average, right? The hydropower tariff.
Right.
Yeah, okay. So I want to also understand what are the key projects that are eligible for higher returns? What are the upcoming projects that you have in the hydro space?
Okay, in the hydro space specifically, if we talk of, we are building a project that is Arun 3 in Nepal. This is 900 megawatt, and we propose to commission it by the end of financial year 24-25, that is in February 25. It is 900 megawatt, and which adds around 1,200 crores to our revenue once it is commissioned. So this is one project which is coming up in the year 24-25. In the year 25-26, we propose to add another 276 megawatt. That is Luri Hydro Project, 210. And then we have Bhalasat, 66 megawatt. So in both the cases, again, you can say that we have a good sum to add to our revenue, more than 1,000 crores. So on an average, in the coming 2 years, we will add a capacity of 900 plus 276 in hydro.
Okay, all right. Hi, Mr. Kapoor, Ms. Kapoor, and good morning. Thanks so much for joining in. So if you could just give us a brief idea, what is the current hydro capacity that you have? You've told us, I think, close to around 1,100 megawatt is what you're going to be adding in the next 2 years in hydro. What is the current hydro capacity, and how do you see it scaling up in the next few years? And also on the non-hydro side, what is the current capacity, Ms. Kapoor? And where do you see that number headed?
Right. See, as on date, our total commissioned projects capacity is 2,377. The major chunk goes to hydro. That is 1,972 megawatt. It's hydro. And we have 404 renewable projects as of today, right? Now, with the passage of time, we propose to add, as far as hydro, I already told you, 900 megawatt in the coming year 24-25. But in renewable sector, we propose to add around 2,000 megawatt in the coming year. One of our major project, that is a single location largest solar project, Bikaner project, 1,000 megawatt, we propose to commission towards September end or October. So this adds 1,000 megawatt to our installed capacity, 900 on account of Arun 3, and several small projects. So a total of about 2,900 we will add in terms of megawatt, both hydro and solar, in the coming year, 24-25. Beyond that, we propose to add approximately 1,500 megawatt to 2,000 megawatt in renewable sector every year, and that we see up to 2030. And in hydro sector, I'm very happy to share that SJVN has started its work on the 3,097 megawatt Italian project in the state of Arunachal Pradesh. SJVN is also working on Suni Hydro project, which is 382 megawatt, and we propose to commission it, say, towards the beginning of the year 28 or 27 end. So,
right. Ms. Kapoor, you've given us a fair idea about the capacity addition, and you have ambitious plans both on the hydro and more importantly on the renewable side of things as well. At some scale, the non-hydro part of the business, will you look at unlocking some value, maybe getting an investor, maybe splitting both the two businesses?
What we see for ourselves is we envision by the year 2030 an installed capacity of around 15,000 in renewables, a good 8,000 in hydro, and a small approximately 2,000 in thermal. So we all our verticals, we are moving ahead in all our verticals at equal speed, especially hydro and renewables. And renewables, you see, it's in line with Government of India initiatives also. As per Government of India vision, it is planned that by the year 2030, we'll have 5 lakh of solar. 5 lakh megawatt of solar installed capacity.
Sorry, you said 15,000 megawatt is the total renewable capacity, ma'am, right? By 2030 is the aim.
2030, which we propose to implement, we envision to implement.
So that's about 5 times from where you are right now.
Yeah, exactly.
Okay. Now, ma'am, could you, just a few points, how much of the capacity of the commission, nearly 3,000 megawatt capacity, the agreements are all long-term power purchase agreements, and how much do you sell in the short-term market as well?
In many cases, the agreements are in place. For example, I mentioned to you my Bikaner plant. We have 1,000 megawatt. 500 megawatt already stands committed to Rajasthan Urja Vikas Nigam and IT Services Limited. 300 stands committed to JKPCL, that is Jammu and Kashmir Power Corporation Limited, and 200 stands committed to UPCL, that is the state of Uttarakhand. So a lot of power projects, especially the solar power projects which are coming in solar parks, stand committed to the respective states. For example, we have about 900 megawatt capacity to be implemented in Khavda Solar Park, Gujarat. This we have got through Gujarat Urja Vikas Nigam Limited, and the capacity is committed. Yeah.
Roughly, ma'am, I mean, so broadly, what were, as of now, how much is long-term power purchase and how much is untied capacity? And if you can tell us, if you get to this, I mean, what's the broad aim? You'd like to have some free capacity as well, right? Right. Untied capacity as well.
Yeah. See, our effort is to sign long-term PPAs. Generally, a PPA is for 25 years. Wherever we have committed, generally the PPA is for 25 years. First effort is always that we get a commitment for our power sale. But there are times when we do sale in the exchange also. For example, as on date, our Netwar Mori project, 60 megawatt, the energy is being sold through the exchange. So both side by side, but first effort is to get into a long-term PPA for 25 years.
Okay. What kind of earnings growth can we expect, ma'am? I mean, on a steady state basis, you've got very steady capacity expansion plans over the next many years, and you've laid out some of that vision. But in terms of earnings growth, what should investors expect on a compounded basis for the next few years?
As of today, exactly, for the year 24-25, I can tell you that we'll be adding around 2,700 crores in our revenue. With the present projects in hand, another 1,000 to 1,500 crore we will add in the year 25-26. And so you can say around this, we'll be adding every year. Because if we are talking of implementing 2,000 megawatt in renewables and the tariff ranges from 250 to 3 rupees. So every year we end up adding 2,000, 2,500 crores to our revenue
Okay.
stream.
Okay. Ms. Kapoor, just before we let you go, I just wanted an update very quickly on this Arun 2 and the Buxar project. Are they on track to be commissioned in February 2025 and September 2024? Any commissioning delays that we should expect there?
As far as Arun, it is Arun 3 basically. Arun 3 we propose to commission by February 2025, as I had already shared. Even in Buxar, we are on schedule, and hopefully the first lighting of the boiler will go to September 24 this year.
Okay, all right. We'll let you go on that note. Thank you so much for joining us. It was a pleasure listening to you and so much to learn as well about the sector as well as your company. So hopefully we'll get to speak to you again very soon. That's SJVN, one of the strongest stocks in the last 1 year. And, that's Geeta Kapoor talking about the demand trends in this space. But let's slip into a break. On the other side, we have a very interesting company, Prince Pipes. Nihar Chheda will be joining in to talk about their acquisition of the bathware brand Aquel. Stay tuned for that.
Welcome back. Well, let's focus on Prince Pipes and Fittings. That's the next management on the show. The company acquired Gujarat-based Aquel brand for around 55 crore rupees. The company is also setting up an in-house manufacturing facility and it's looking to expand its bathware presence. Well, to discuss this acquisition and the way ahead, we're joined by Mr. Nihar Chheda, the Vice President Corporate Strategy at Prince Pipes. Hi, Nihar. Good morning and good to see you in. Give us a few details of this. You're going to be spending closer around 55 crore rupees. Could you tell us the acquired unit, what kind of utilization levels is it at? I understand it's not too high. And at optimum levels, what kind of revenue can you generate from this acquired unit?
Sure. Yeah. Morning. Thank you for having me. So we have signed an asset purchase agreement for the acquisition of the iconic Aquel brand. And along with that, we have also purchased the plant at Bhuj, Gujarat for a total consideration of 55 crores. To answer your question, currently, yes, the utilization levels are low because of the balance sheet constraints that the target company had. But now with our financial muscle, we will be able to significantly increase the utilization because the distribution network is already deeply entrenched. So at peak capacity, we can manufacture around 1 lakh pieces per annum, which translates to a revenue of around 100 to 120 crores per annum. And also the total land bank is around 8 acres and more than 2/3 of the land is still available for future expansion. So once we completely spread out the asset, we would be pumping in more capital to further scale the bathware segment.
Oh, interesting. So 120 crores. So approximately, you'll be spending 55 crores and getting an asset turn of close to around, 120 crores. Got that. Now, give us a few details. By when do you get to this optimum level? Do you think in FY26, FY25? If you could give us a rough number on that. And also, what kind of margins will you enjoy on this acquired business? You also mentioned the scaling up plans. So By when do you take a call on that?
Correct. So I think, to answer your question, today we are a pioneer and the leader in our core segment, which is piping, and we want to replicate that success in the bathware segment. And this acquisition is key to that. So this deal helps us in three ways, basically. One is we get access to a strong brand like Aquil, which has a very strong market recall, especially amongst key stakeholders like distributors, builders, architects. Second, now we have in-house manufacturing at Bhuj. And third, we have now a deeply entrenched distribution network for the bathware segment. So I think for the next 2 to 3 years, our focus will be to use our financial muscle as well as the brand to sweat out the asset. And I think over the next 2 to 3 years, only post that would we look to pump in more capital to scale the business further. Basically, this deal has just helped us accelerate our go-to-market for the bathware segment, which we have entered into only 6 months ago.
You want to give us the margin number as well?
Sure. So I think initially first 2 to 3 years, we would be heavily investing in manpower and branding. But if I look at over the long term, I think this business will have superior margins to our current piping business as well. So over the long term, 13 to 15% EBITDA margins are sustainable once we hit a certain threshold.
Okay. Niyar, hi, good morning. Prashant here. So, roundabout in the range of what you make right now, right, in terms of margins there. Could you tell us how has fourth quarter been for the business, as it stood before you made this acquisition? Because in the third quarter as well, I mean, the volume growth was a little weak as compared to some of the other players in the segment. I think you lost some market share as well. Has the fourth quarter seen any improvement?
Yes. So, we had an ERP transition going on, which impacted our volumes. But we are back on track. And, we believe that the demand from the real estate and infrastructure segment will continue to deliver. And I would also like to highlight that our 8th manufacturing facility for pipes is on track in Bihar, where we acquired 35 acres of land from the Bihar government. We plan to invest 220 crores to put up a capacity of more than 48,000 tons per annum. We expect to commercialize commercial production from Bihar in 12 months from today, so quarter 4 next fiscal. And we are aggressively putting up capacity not only in bathware, but in our other 2 segments, pipes and water tanks. So we are aggressively adding capacity across segments, keeping in mind that the demand from real estate and infrastructure, not only in the current quarter, but over the next 2 to 3 years, looks to be extremely healthy.
Niyar, have you, 2 things. One, what is the capacity utilization as of now? With our, of course, the Bihar capacity will be important. What's the capacity utilization? And in the fourth quarter, what's the market share that you had across segments, if you can give us a sense?
Sure. So currently we're at around 60% capacity utilization. In our business, once you start reaching 70% capacity utilization, that's peak. So which is why we have been ahead of the curve with adding capacity in Bihar, which is going to be critical for growth in the eastern part of India, which is growing at a fast pace. And currently we are at around 7 to 8% market share in our core business, which is piping. So around 40,000 crore market size, and we would be around 7 to 8% of that currently as we speak. Our second vertical is water tanks. Total industry size would be around 5,000 crores. We've entered that segment only 2 years ago, so it's nascent times for us. And bathware today would be a 15 to 18,000 crore market size. So the total addressable market for us now becomes around 60,000 crores. And I think this is an opportune time for this kind of an expansion with the way real estate and infrastructure demand tailwinds are currently.
Can you just give us a final figure on the volume growth? What are you expecting to see? And can you break it up for us between agri and non-agri? I didn't get that number.
So I'll stay away from quantifying growth in the middle of the quarter, but I'm happy to give a directional view. So the demand from non-agri, which is around 70% of our business, continues to be strong. And demand was strong in the previous few quarters. So only due to our transition did we have some supply chain issues, which are now completely resolved and behind us. And the rest of our portfolio, around 30%, which is agriculture, we are also now seeing strong demand, which is a seasonal business from Jan to June. But now that commodity prices of PVC are extremely low, our finished good has become extremely affordable, which is another tailwind for demand. So with the tailwinds of real estate as well as affordability coming back in both raw material and finished good, makes us more aggressive and bullish on demand going forward.
So I understand that you don't want to give us any specific volumes, but if you look at the trajectory, right, in terms of tons, the last 3 quarters have seen a rise. So there was 37,000 tons in the Q1, then it went to 40 and 41. By Q4, do you think it will be better than the preceding 3 quarters? Just trying to understand the trend.
No, of course. So quarter four is, traditionally has always been the best quarter for us, for the industry as well as for us. And quarter four volumes will be, significantly higher than the first 3 quarters as well.
Okay, all right. We'll leave it there. Thank you very much for joining us, Nihar, and great speaking with you, and a really good sense of the business as it stands right now. Good luck to you with the new acquisition, and of course, the capacity expansion in Bihar that you spoke about as well. Now, Nazara Technologies is the next company that we are engaging with. The company has set aside a war chest of $100 million for mergers, acquisitions in markets like India, Europe, North America. The company previously said that they expect FY24 margins to be in the range of between 12 and 13%. Nitesh Mittersain is a Joint Managing Director and CEO at Nazara. He's joining us right now. Thanks very much, Nitesh. Appreciate you joining in here on CNBC TV 18. It's good to speak with you, as always. You've also raised money from prominent individual investors and funds as well through a pref route. Could you talk to us about what exactly is on your mind in terms of acquisitions? What space are we looking at? Do you already have this chalked up in terms of what you want to do? And it's a matter of sort of doing it, signing on the dotted line. Just give us a sense.
Yes, of course. As you know, we raised 760 crores in recent months, and the company was already well capitalized. I think at a consolidated level, we have, in excess of 1,500 crores of cash. So very well poised to, continue to acquire and build, which has been a strategy over the last few years, which has been quite successful as well. Especially right now, we are finding a lot of opportunities in the Western markets. I'm here in San Francisco attending GDC, which is the largest gaming conference that happens. And there's quite a lot of interest to work with Nazara. So I think, especially focused on gaming studios, similar to the WildWorks acquisition that we had done last year. We are seeing, the similar playbook can be replicated with slightly larger studios, which we are pretty actively focusing on building a pipeline. And hopefully in the coming quarter, Q1, latest Q2, we should be in a position to close some deals.
Deal, not deal, right? Deals. So more than one. And
hopefully so.
And in what space, if you can, without, of course, not getting any more specific, but in what space? Gaming, right? And what would be the size broadly? How much would you spend towards these deals?
Sure. So I think we've earmarked, as you would have read, about $100 million or equivalent to a little over 800 crores in INR to invest in these opportunities. From a target perspective, we are looking at game studios that are profitable, generating good cash flows, and own gaming IP, very similar to the Animal Jam IP we picked up last year. I think that's turned out pretty well for us. And we've now got a playbook that we can replicate at a slightly larger scale. In terms of revenues, we're looking at businesses or studios that are at least 100 crores in revenue, but could be anywhere from 100 to 250 crores in revenue with a, profit, with a EBITDA margin in excess of 15 to 20%.
Okay, all right. Hi, Nitesh. Good morning and good to see you in. I hope you're having a good conference, as you told us, plenty of interest out there. I want to ask you about 2 possible acquisition targets. One is on Smash. Reports are indicating that y'all are interested via the, the insolvency route, I think so. So tell us, give us an update on that. And also the last time we chatted, I briefly asked you about Delta's online gaming business. Are you all interested? Yes. Are there any kind of talks that have taken place so far?
Sure. So with respect to offline entertainment, we do believe, or we are building a thesis where we think that there could be convergence between, gaming online and gaming offline. And that kind of piqued our interest in Smash. We have, applied in the NCLT process, and we'll see how that pans out in the process over the next few weeks or months. As far as your question around Delta is concerned, generally, if you remember, the online RMG space or the real money gaming space has gone through a turbulence, and more clarity is, coming out, especially on the going forward taxation, etc. So we are in talks with multiple parties, in that space to see how we can synergize and how we can build a larger business on the real money gaming front going forward. So definitely looking at all the opportunities over there.
And Delta's business would also be on your radar then.
It possibly could be.
Okay. We'll wait by to hear more on that. Nitish, thanks a lot for joining in. I wanted to talk a little bit about Classic Rummy as well. Over there, you've recorded an EBITDA loss in the quarter gone by. Is it still loss-making, and is that the expectation as we move along into FY25 as well?
I think the business has seen improvement. There may be a marginal loss of profit in this quarter. But for us, I think the bigger picture is what's the scale-up opportunity in RMG. Classic Rummy is just, 50, 60 crore business for us, contributes less than 2-3% of the overall revenues. So it was really originally meant to be a toe in the door when the market opens up. And can we use that as a consolidation vehicle, as a scale-up in RMG, something we are exploring. We're still some time away from doing something significant there, but we're definitely quite excited about what could be the potential in the future.
So what can be the potential, Nitish? I'm still trying to understand, RMG, I mean, it hasn't been doing as well so far for you, but you're talking about the opportunities, and we've been speaking about this for a while. Over the next 2 to 3 years, particularly in RMG, what could the scale-up opportunity be for Nazara?
Yeah, look, as has been seen in India, the skill-based real money gaming has scaled up significantly in terms of monetization. In terms of, the share of revenues of gaming, it has by far the largest share. Nazara over the years took a conservative view because we were waiting for more clarity on how this business is going to be regulated and how it is going to be taxed. In October last year, the policy that came out on GST kind of gave, I think, much more clarity, at least on the going forward taxation on this business. And that now gives us more confidence in terms of, moving ahead. In the last few months after that announcement, we have been waiting for the market to settle because a lot of the businesses have got reset, the business models have got adjusted. So we didn't want to rush into it. But I think in the calendar year of 2024, we may see good opportunities to look at this scale up. And once we enter it, I think in terms of a revenue contribution could go up significantly from the 2-3% that it is there today.
Okay. All right. So that is on real money gaming, right? I also want to talk a little bit about the publishing division. You went live with your inaugural set of games. What is the kind of traction that you've seen so far, and what's the scope over there?
It's still very early days to give any specific numbers, and it'll take some time to scale. But what I'm definitely seeing is that global game developers are very interested in the Indian gaming market. They see, a 500 million users market still picking up on monetization, but a lot of the large players globally want to enter. And I think Nazara can be a great partner for them in the Indian market, to build local live operations and really scaling up their games in the Indian market. So we are investing in local game ecosystem, investing and working with local game developers. But you will also see in 24 us partner with many global gaming players to kind of publish their games in India. So this is a long-term play for Nazara, not an immediate large monetization play. But I think it's very important for us as a, being very strong in the Indian gaming market as a local player. This is a very strategic move for us.
All right, Nitish, we leave it at that. Thanks a lot for joining in and speaking to us. All the best with your, expansion in the RMG, the real money gaming business, and the M&A opportunities over there. Let's slip into a quick break. On the other side of the break, we'll put focus on the commodity space. Manisha Gupta joins in.
Okay, welcome back. You got the market, which is now moved up even more. We started with a 150, 160 point higher start. Make that 200 now. Look at that. And this is a sharp acceleration on the way up that we are picking up. And, you know, earlier we were talking about the possibility of that building on the gains that we start with. Mitesh was echoing that sentiment as well. He's back with us. Mitesh, your thoughts, the day so far, the hour so far, as I should say, and what would your trades be?
It's been a nice hour, I think, as I said, I think, today, because yesterday, there was some signal on the bank Nifty, which was suggesting that a reversal could happen. We have seen a very strong follow through on the banking names and banking stocks. So I think the intraday charts, the hourly, the 2 hourly charts suggest that we could see levels of 47,200 on the spot bank Nifty, which is another 300 points away. And in case things go even better, 47,700, 750 zones could also be tested. So I maintain a positive bias. On the stock side, BHEL is something, which has come on the radar. So keep a stop at about levels of 227. Look for targets of 245 here to begin with. And the other one which I like is HDFC Bank. It's been underperforming, but I think this could pick up now. There are some signs of reversal. So take a very tight stop at 1435. Look for targets of 1475.
All right, thanks a lot, Mitesh, for that. Let's go across to Manisha Gupta now. She's going to tell us about the commodity markets. Manisha, what's the one commodity you're tracking today?
Oh, it's going to be gold because we're looking at all-time highs onto this one yet again. So we've seen 3% of gains in gold in this week itself. Gold actually has been hitting all-time high for most part of last fortnight. And in the last 1 month, we've gained more than 10% for the precious metal prices there. Also, when you look at the prices within the year of January, either the year of 2024 rather, we started with $2,058 an ounce. So we started on a higher note itself. And then we saw some profit taking. So 1992 was the low that the gold prices made in the month of Feb, and we're trading at 2,200 right now. The all-time high until now has been $2,220 an ounce. Not just gold, silver prices also have been running up. We are trading at a 15-week highs onto this one. So silver price has gained 2.5% overnight, 4% in this week, and has gained 13% in the last 1 month as well. Markets are looking at stronger buying, especially after the US Fed meeting, which has indicated 3 rate cuts in 2024. So that 75 basis points is what the street is working with. Also, the dollar index and treasury yields have declined. That supported many of the metal buying that we've seen in Asia right now. And after the US Fed meeting, the Fed tools are now pricing in 73% of a probability of a rate cut for the month of June there. This is higher from 65%. That was before the US Fed meeting announcement came in. Safe haven buying, geopoliticals always has had supported in gold, and that's what's happening right now as well. Apart from that, it also has to do with the central bank gold buying, especially in China, Poland, Singapore, Libya. These are some of the top buyers in sense of central bank buying in gold. India is on the 5th number there. There also is strong retail buying that you have seen in China and Turkey. So on the spot, there's a lot of on-ground demand coming into the markets. If you look at the forward-looking in sense of prices now, we have Citi, ANZ and Saxo Bank all talking about $2,300 an ounce is what they're anticipating in the second half of this year. This will happen when you actually see rate cuts happen. But there have been various other forecasts as well, from 2,200 to 2,250. Most bullish coming in from JP Morgan. They believe if the gold prices cross above 2,300, then 2,500 of a possibility in this year is what they're working with.
Okay, so gold prices, you said $22 an ounce. So what does this mean in terms of the MCX gold rate? Has it crossed 65,000 already?
Oh my God, Sonia, we're trading at 66,700, wow, which is an all-time high. And yes, there are conversations about 70,000 being hit in this year itself.
Wow, 10 grams of gold, yes, at 66,700 rupees per 10 grams. Wow, big move coming in there. Thanks a lot, Manisha, for joining in. So that's the big headline, really. Gold prices at record highs. But expect to end FY24 in a growth trajectory that no one in the history of global aviation has ever seen. These are the words coming in from Akasa Air founder and CEO Vinay Dubey. He also talked about their plans for international expansion and much more. Listen in.
We have foreign government permissions that are involved. And sometimes these foreign governments take 3 months, sometimes it takes 4 months or 5 months. We've made this application a little while ago. And so I would say it's imminent. And my thought is hopefully we'll get all our permissions in place for Riyadh, Jeddah, and Kuwait, like we did for Qatar, in a very short period of time. But I'm unable to give you a specific answer. It's not 9 months, it's not 1 year. Hopefully a lot shorter than that. Perhaps later this summer. I will say, two things in terms of finishing FY24. One is, financially and from a cash perspective, in an extremely strong position. So that's the one thing, I will say that we've built this, rock solid foundation when it comes to both the business model and when it comes to being capitalized and cash. And that's one way we expect to end FY24. And the second way is, in a growth trajectory that no other history in global aviation has ever seen. And the third thing is we expect to end I know I said two, but I've got the third. We expect to end FY24 as India's most on-time and most reliable airline. We're not worried based on our delivery schedule. We've been able to work things out with Boeing to the point where the delivery is going to meet our expectations and is going to allow us to continue to be India's fastest growing airline. So I'd say that lots of growth, lots of international flying, lots of growth opportunities for our employees is how we expect FY25 to look like. Akasa has no shortage of pilots, right? We've got 700 pilots here. We're extremely pleased with the way in we've been able to attract and retain our pilots. And that's, really because of the modern generation aircraft that we have, which is the aircraft of the future. And pilots, would like to make a career out of that particular aircraft. It's because of the employee-centric stand that we've taken, the rigor with which we train pilots. And so, there's a variety of reasons why we've been able to attract and retain a number of pilots. And like I said, we have almost to the T 700 pilots.
Okay, let's do one thing. Let's take a quick commercial break on that note. You can catch the full conversation with the Akasa management all day today on CNBC TV 18. Let's take a break. On the other side, we will connect with the management of NLC India to discuss their business, the recent OFS and the outlook going forward. Welcome back to Bazaar Morning Call. Well, NLC India is the next management on the show. The government recently sold 7% stake. Prasanna Kumar Motupalli, who is the chairman and managing director at NLC India, joins us now to talk more about that. Mr. Motupalli, thank you so much for joining us and taking the time out to speak to CNBC TV 18. If you can just, start by telling us about a couple of things that recently went through with the company. You've received this particular order from iFox Wind Technique. You all received an LOA from NLC India for the restoration of 33 WTGs. Can you tell us a little bit about what was the earlier status of the power plant and what does this particular order pertain to?
Good morning, madam. Actually, NLC was having 51 megawatt wind power stations in the state of Tamil Nadu. And they are old wind machines, and there are some issues with the availability of these machines. So complete revamping and upgradation of these wind turbines is awarded. And with this, the capacity utilization factor of these wind turbines will improve after implementation of this revamping plan.
Okay. So can you tell us what does this mean? I mean, what was the earlier status of the power plant and what would this mean for you in terms of the way forward?
Because of this revamping and upgradation, the capacity utilization factor of windmill will improve, and the generation from the windmill will also improve.
Okay. Mr. Mudupalli, hi, good morning. Prashant here. You know, another bit of news flow, actually, there's been a lot happening, right? So you signed a MOU with Rajasthan for the formation of a joint venture for thermal and renewable capacity. Could you provide us with some details? I mean, what exactly is this joint venture going to do? What are you going to do in this joint venture? You know, there's some total capex of 7,000 crores which has been sort of assigned. Where will this be used? How will this be funded? What are the timelines for any projects that you will build under this JV?
Actually, as you know, already NLC India Limited is having one mine, lignite mine, and power station in the state of Rajasthan, and that is Barsingsar Thermal Power Station. And it is supplying the cheapest power to the state of Rajasthan already, and is powering the growth story of Rajasthan. As you know, Rajasthan is having huge reserves of lignite, and NLC is having experience of installation of lignite plant. To take advantage of this, JV is being formed for setting up of 125 megawatt lignite-based power plant in the state of Rajasthan, and 1000 megawatt solar power plant also is being planned to take the advantage of the high solar radiation that is available in the state of Rajasthan. This 7,500 crores we will be spending on this. This 125 megawatt lignite-based power station we will be spending around 1,500 crores. And for this 1,000 megawatt solar power plant, we will be spending 6,000 crores. So we are taking up all the actions to start the activities at the earliest. And I think the lignite-based power station is next 4 or 5 years that will be completed. And this 1,000 megawatt solar power plant in next 2 years period that will be completed. And the entire 7,500 megawatt will be spent in next 4 or 5 years.
7,500 crores, okay. And now this is, will there be investment from the government of Rajasthan as well? Or this is just, I mean, an agreement for them to buy power? These will be long-term agreements.
It is a JV that will be operated by NLC. It will be, the majority stake will be of NLC, and there will be some minority stake from Rajasthan government.
No, this 7,500 crores, 7,000 odd crores, this is investment by NLC, and there'll be something which will be put in by the government as well.
No, this actually 7,500 crores is the total investment that is total for the projects. And out of that, the majority stake will be NLC and the other stake will be Rajasthan.
Okay, I'll come back to the business in a bit. The other thing we wanted to talk about was the government selling 7% stake in NLC via the OFS route. Just wanted to understand any more divestment from the government planned in this calendar year itself, and have there been any discussions on that front?
No, madam, actually this disinvestment was mainly to meet the 19A regulation of LADR of public holding of more than 25%. I don't foresee any further disinvestment immediately.
Okay, no further disinvestment, got it. With onboarding of new capacities, what is the proportion of merchant sales volumes as a part of the overall mix, if you can tell us? And how are merchant rates trending currently?
Madam, as on date, our entire power is tied up. We don't have any merchant power based power plant. But whenever there is no schedule from the respective beneficiaries, we are taking this to the market and able to sell that with reasonable prices. But for merchant power selling, we don't have any specific power plants as on date.
Okay, got that. Now, just one thing, you're expected to commission 2 gigawatts of thermal capacity at Ghatampur and new mining capacity up to FY25. Could you tell us by the end of FY25, that is the next financial year, the end of the next financial year, what should be the total capacity for NLC India?
See, as on date, we are a 6 gigawatt company. 1.4 out of that, 1.4 gigawatt is renewable capacity. So, in the financial year 24-25, we will be commissioning the entire 2 gigawatt capacity at the Ghatampur and 300 megawatt of solar at Rajasthan and 150 megawatt hybrid power project at Rajasthan and Gujarat. So, in the financial year 24-25, we will be adding approximately 2,450 megawatt. Out of that, 2,000 megawatt will be at Ghatampur and around 450 megawatt renewables in the state of Gujarat and Rajasthan.
Okay. Gives us a good sense. So you'd basically be at about 8.5 gigawatts by the end of FY25, right? In terms of operational capacity.
Exactly.
Got it, sir. Thank you very much for joining us. Good speaking with you and good luck. Always great to speak with you here on CNBC TV 18. The market's up 200 plus points at about 22,060. IRB Infrastructure is the stock which is actually in focus. It's buzzing. There's a positive note from Kotak Equities. Vivek is here with exactly that. Vivek.
Well, that's right. So, IRB Infra, if you recall, on March 14th had informed the exchanges that there was a secondary stake sale as far as the private InvIT was concerned, and this had got the market excited because that had given a value discovery as far as the private InvIT was concerned. Remember, IRB holds 51% stake over there. Post that, IRB Infra, the management met to a multiple sell side, and there have been notes that have been coming along. Today, a very interesting note from Kotak Institutional Equities. They've gone ahead and upgraded the stock to an add rating from the earlier sell stance that they had. They've raised the target price to 65 rupees from 60 rupees earlier. So what is it? Number one, they've gone ahead and reacted to this particular deal. They are saying that this particular deal values the private InvIT at 40,700 crore, which means that IRB's implied value in this particular InvIT is 20,400 crore, giving it almost 34 rupees a share value just from IRB's stake as far as private InvIT is concerned. Secondly, what they're quite positive on is that they're saying that the road sector itself is witnessing a change as far as ordering activity is concerned. They're saying that ordering from NHAI has now shifted to the TOT as well as the BOT projects, and they are seeing visibility of close to 44,000 crore worth of BOT projects in the pipeline. They believe IRB is well placed to go ahead and capitalize on these particular project and awarding opportunities, given the fact that amongst most of the infra companies, IRB has a much stronger balance sheet. On the back of that, today they've gone ahead and upgraded the stock.
Okay, thanks a lot for that. That's IRB Infra, the big mover right now, 9% higher. By the way, the market is also in great position right now. The Nifty holding on to 22,000, up 200 points, and the mid-cap index is up 800 points. Is the worst of the market fall behind us? Maybe too soon to tell, but for now, we're just enjoying the gains that we have on our hands. At least the bulls are enjoying it for now. With that, it's a wrap on Bazaar. Chartbusters coming up next. Stay tuned.